Hi everyone, this is a video to help you understand accounting. My name is Alan or Kuo-Lun. Um, let's start with it. So the importance of accounting. Accounting is an essential part of any businesses. It helps business owners track their financial transactions, make informed decisions, and keep their finances in order. It serves as a language of financial information, providing a systemic way to record, analyze, and communicate financial transactions and data. Importance of accounting can be summarized in three key aspects. First, accounting ensures the accurate and reliable recording of financial information by maintaining detailed records of transactions such as revenues, expenses, assets, and liabilities. Accounting allows for proper financial reporting, analysis, and decision making. This information enables stakeholders, including investors, creditors, and managers, to assess the financial health and performance of an entity. Second, accounting facilitates effective management control and planning through financial statements and reports. Accounting provides insights to the financial position, profitability, and cash flow of a business. This data helps managers to make informed decisions, set budgets, evaluate performance, and identify areas for improvement. And lastly, accounting fosters transparency and accountability. By adhering to established accounting principles and standards, organizations can ensure the accuracy, consistency, and comparability of financial information. This promotes trust among stakeholders, protects against fraud and mismanagement, and facilitates compliance with legal and regulatory requirements. So the user uses opportunities in accounting users. Financial statements are used by external users such as investors, creditors, and government agencies, while managers use them to make internal decisions. The uses of accounting includes budgeting, forecasting, evaluating business performance, and ensuring regulatory compliance. Opportunities-wise, accounting provides opportunities to work in various industries such as public accounting, corporate accounting, and nonprofit accounting. So regarding ethics and accounting principles, the principles the ethical principles accountings must abide by ethical principles and standards such as integrity, objectivity, confidentiality, and professional behavior. And there are two ways to accounting. One is GAAP, generally accepted accounting principles. The other is the International Financial Reporting Standards. Here in the US, we use GAAP. These are a set of standard accounting principles that provide guidance on how to prepare financial statements. And the IFRS are accounting principles used by companies around the world to ensure uniformity in reporting their financial results. Uh, Processing transactions and role of source documents. Recording transactions is a huge, crucial part in accounting, as transactions are recorded in journals using source documents such as invoices, receipts, and checks. We have assets, accounts payable, accounts receivables. These are all going into your accounting. Role of source documents. Source documents provide evidence of financial transactions and serve as a record for these transactions. So accounting needs to be verifiable. It needs to be sorry, true and not fraudulent. Accounts, ledgers, and chart of accounts. Accounts are individual records of increases and decreases in specific assets, liability, and equity elements. Ledgers are a set of accounts used to classify similar transactions, and chart of accounts is a list of all accounts used by businesses and their assigned account codes. So we're going to be talking about debit, credits, and double entry accounting. Debits present increases in assets and decreases in liabilities and equity, while credits represent the opposite. And we'll go into more detail regarding this when we talk about the T accounts. Double entry accounting is a common practice, all transactions must be recorded in at least two accounts with one debit and one credit. The accounting equation is assets equals liabilities plus equity, and it must always remain in balance. So this is an example of T account. We can see on the left side is debit, on the right side is the credit, and as we discussed earlier, increasing the asset will be on the left side, increase in liability will be on the right side because it's credit. T accounts are a visual representation of a company's accounts used to track debits and credits in a clear and organized way. They are essential to the double entry. Sorry. They're essential to the double entry account system, which ensures that all financial transactions are properly recorded and balanced. And here's an example. Trial balance and balance sheet. Trial balance is used early on in accounting. It's for internal use. Balance sheet is prepared at the end of the year for review purposes. Trial balance is a list of all the accounts in the general ledger with their respective debit or credit balances. It is used to ensure the accounting equation is in balance. And a balance sheet, on the other hand, is a financial statement that reports a company's assets, liabilities, and equity at a specific point in time, usually at the end of the year, which is the 31st of December in the year you are reporting. It provides insight to company's financial position. And here is an example of a trial balance. You can see there's share capital, furniture, fixture, building, creditor, debitors, and it's separated into debits and credits. And also, as mentioned earlier, it should always be equal. And this is a example of a balance sheet. You can see the balance sheet is categorized into assets, liabilities, and equity. And then each of them also shows current assets, long-term assets, current liability, long-term liability. And again, everything must equal. Assets must equal liability plus equity. Successful accounting requires collaboration between different departments, such as finance, tax, and audit. The ultimate goal of accounting is to help business maximize profit and create a financially sustainable future. Thank you so much for your time.